welcome to Pro Trader Strategies Market Commentary for Friday, June the 5th. It's Unenjoyment Friday. That's the first Friday of the month where we get the main unemployment numbers for the U.S. economy. It is one of the more important numbers, and today literally knocking it out of the park. I mean, it was like blew everybody's mind. As a matter of fact, everybody thought it might have been a misprint for the first 5 minutes, I think, of that data being released. So let's get on with it without further ado. We got the non-farm payroll change. It was expected to be negative 7,750,000, okay? And some people were as much as negative 13 million unemployment change there. Now, it came in as a build of 2.5 million jobs. That is 10 million over what this number was expecting. So literally knocking out of the park. Yes, last month's number was revised down by about, I think it was, 500, was revised down by 100,000. Not going to make any difference in this headline number. It literally blew the roof off of any expectations there. That means the unemployment rate was expected to be around 20%. Well, it came in now at 13.3%. So literally almost a V-shaped recovery. It's just absolutely mind-boggling how well that number came out and showing that this economy is very resilient. So, very looking like that V-shaped recovery that some people were really feeding. Now, on to the overall markets. We are seeing crude oil move higher by about $1.80. Now, with that number, I can't fade crude oil on a rally here. We're going to see it cover that gap that we've been talking about. The low there is around 41, I believe. So touching very close to 40 today. As we can see here, the low there, 41.05. So we're going to cover that gap almost assuredly next week. I would expect us to rally up. We might even look at testing that Fibonacci at 23%. That's correlating to about $46.30. So looks like we're going to cover that gap. Oil companies probably going to start looking at ramping up some production here as they start seeing this come back into a break-even point where they can start making money, because right now they still are going to be losing money if they are producing. OPEC is now in the green on production. Anything above 30 is profitability for them. So that's making a nice move higher here. The Bank of China, boys, you guys made a huge mistake puking out of oil at a negative value there, if we all remember that when that happened. All right, gold futures is coming off by about $46. This is on the expectation that the economy is going to do very well and we're going to start moving forward. So the gold bugs are going to have a lot of difficulty swimming upstream here, as people are going to be pulling money out of gold, that safe haven asset. It's kind of a recessionary type trade. Yes, we probably are going to be still looking at recession here, but the recovery might be much quicker than what we saw like in 2008. And, that whole recovery was drug out because of policies and stuff like that. I'm convinced of that. I think that Trump does a very good job of trying to get that money out to the people, create that velocity of money, and that's what really creates the recoveries in these types of scenarios. It's not going to be done through taxing. It's not going to be done through government spending. It's going to be the people, when they have the money to spend, that will create that type of recovery. And that's probably what's going on here with this recovery we're seeing. These people that were unemployed are getting benefits more than what they would normally get with unemployment, and that's creating some spending, right? Even some people that got laid off this unemployment with the extra stimulus on top of it were making more money on unemployment than they were in a real job. That's going to end relatively soon, but the fact of the matter is those people were probably spending a little bit more than what they were able to when they had a real job, because of that extra income, and probably created a little bit more buying frenzy there and allowing some of these local businesses to kind of survive this a little bit. So that was a good thing, I guess, at the end of the day. All right, bonds again. I'm glad I pulled the ripcord on that DLT trade because bonds are breaking out of that range. It looks like they are adding in some interest rate hikes going forward. Those low interest rates for home mortgages are starting to evaporate rather quickly. Bonds down 2 points on the day. And again, that's because we are seeing a massive move higher here in the equities. Now, the VIX is coming off, but we are seeing some equities get a spike in volatility. And I think a lot of that isn't having to do with buying puts and protection necessarily as much as it is people running out and buying calls. So we can see volatility spike in these underlyings when people are buying calls as well. A lot of people have the misnomer that we see volatility spike when there is fear necessarily to the downside. But, you can see that volatility spike on FOMO, fear of missing out, right? So that's what's really creating this volatility on the rally here. We're seeing the Dow Jones up almost 1,000 points on the day, and literally overnight we were pretty much unchanged, but off of that number you can see we got above yesterday that 200-day moving average, and today it is a rush. I mean, it is just a pummeling of any shorts. The shorts are scrambling to cover, and that's aiding to this type of rally. There's a lot of people that I even know that were talking about this market's really got to capitulate. And I was saying, hey, I think it really capitulated, down here back in March when we started seeing those peelbacks. That's when I started adding a lot of stocks to my portfolio in my IRA. And now we're getting that massive boom higher. As I was talking about, I think it was just overdone to the downside. So we're seeing that fruits of the labor. And we've got a NASDAQ all-time high here, as you can see here at 98.26 on the highs as we speak, up almost 200 points, up 2%. Dow Jones is up over 3%. We've got the E-mini S&Ps up over 3% here, up 93 points on the day. NASDAQ is dragging a little bit, but that's because it's at all-time highs, and we are seeing some people pull money out of some of those tech-heavy stocks and throwing it into travel and leisure, which has been the biggest dragger. Boeing, was just around 40 some odd days ago, 48 days ago, I think it was trading 89, is now in the 200 handle. So Boeing blasting off. So people are starting to throw their money at some of these travel and leisure. Las Vegas, we talked about, is opening up. Disney here in the United States is going to be opening up relatively soon. So all of those things are causing this market to really rally. So E-mini S&Ps, you can see where we got in overnight. It was, pretty long. There was actually some bullish sentiment overnight heading into that economic data point of the non-farm payrolls. I don't think anybody expected it to be as good as it is, and that's part of this extra push to the upside. I don't think you're going to see a lot of people covering coming into this weekend like we have been seeing on Fridays, where there's been some heavy selling pressure. I think that right now where we are, we're going to settle down here a little bit because it is a summertime, summer markets, and usually on Fridays we see that rush to the Hamptons, what we used to say on the floor, late in the afternoon. So we're right around 11 o'clock in Chicago, and it's afternoon or just almost noon, I should say, in New York. And usually after noon is where we start seeing that volume really start to evaporate as people head off to the Hamptons, is what we used to say, or taking off on Fridays in the summer. So I think we're going to probably see this market start to settle down heading into that, but people trying to shore up and get some positions on ahead of that. And I don't think we're going to see a massive sell-off today, other than in PENN. Now, PENN made an all-time high today at 40.14. Now, you guys know I'm long PENN from $4.70. Somewhere in and around there. $4.49 is where I bought that in. So I've been writing this out. When we hit that all-time high today, I went in there and was looking to cover some calls in there and tried to get in on the 50 strike. Went down to the 48 strike, and then I decided, this market's coming off too much. I don't want to get too close to where this has been trading. I would be happy to cover it relatively close to that 50 mark if we started making a nice move, but this is a long-term trade. I think that they are going to do very well, having acquired 30% of Barstool Sports, so I do want this as a long-term trade in my IRA. So I don't want to get too aggressive with doing covered calls in this, but I was thinking, you know what, if we were up around that 50 handle and I'm making that much of a win on that type of trade, I would look to cover it around 47, 40 to 50 or something like that. So, which would be another over 10% higher is what I was kind of thinking. If we would have gotten another 10% higher than this, I would definitely have looked to cover some of my pin at least. All right, on to American Airlines. We got a blast off today, testing that 200-day moving average there. Well, American Airlines is part of that travel and leisure that's been a big lagger of the sector, and there was a big sector rotation. You can see the shorts probably got put to them and socked in the jaw yesterday and today. Today, I think it was like a blast off with some of those people puking out of some of these positions. Now, American Airlines, in regards to the entire travel and leisure sector, especially the airlines, let's say, American Airlines is very debt ridden and probably one of the ones that is struggling or would be struggling the most without this, opening up very quickly. And remember, these guys really need to sell every single seat in order to be very profitable. I think if they are, less than a third, if they're only 2/3 full, then they are kind of like at in and around that break-even level. These guys have been flying where, they are at 10% capacity and really losing money. And with that debt that American Airlines has, I think that they are going to be ones to struggle a little bit, which is why they've been a bit of a lagger. And this is something that really was, I think, some short covering on the upside here. That being said, I decided to go in. I didn't cover this trade in my IRA, and I went in and did decide to do some covered calls in there and sold the 30 calls in there for 90 cents. So I got good strike location in there. I didn't catch that high. I did catch it when it was trading right around $20.50. That's where I ended up getting hit on my short calls. Now, something to note here, I was looking at the 45 days to expiration there, thinking I might be able to get a little bit more bang for my buck, but basically selling those same 30 calls in the July contract, I was only looking to be able to collect about $1.40. Well, if I only have 15 days to go and I can collect 90 cents, that seems like a no-brainer, right? I mean, so I did go in there and do that in the shorter duration, try and get some of that theta decay, because we talked about this in our webinar just yesterday, how this theta component really ramps up inside of 30 days, where that thief in the night comes and steals our premium. Well, when I'm selling premium in high volatility, we got that huge volatility spike yesterday, and today it continued on a little bit. Well, I got in at the right time, so that allowed me to get up there at that time node, as we see here with the point of control, which is a very good strike location. I think that the market might want to migrate there over time, but I don't think we're going to get there in the next 14 days, which makes it great. Next 45 days, yeah, we could see something like that, but also normally we see volatility affect the longer duration contracts, but in this case, the shorter duration contracts, we're really seeing that volatility jam up in there, and huge volumes going on here in American Airlines. I think if you look at the volume on American Airlines at that 30 strike, I think there was something like 12,000 contracts traded today. So that, sorry, I'm on pin because I was still trying to get my pin short calls. Didn't happen, but yeah, that 30 strike, 12,000 contracts, 14,000 contracts traded today, just over, and open interest now going to be well above 12,000. So that was the big strike that everybody was looking at for American Airlines, and now the volumes in there are just going bonkers. All right, so that's all I've done. I haven't taken anything off. I'm going to ride out this for a little bit more. I mean, my portfolio is knocking it out of the park right now, so I'm only looking to cover some things like American Airlines, where I'm a little bit iffy on their balance sheet for the most part, and would be happy to take some of those off for a profit there. I got into this American Airlines at around $14, I think, on the downswing. So, making 100% on American Airlines, which I'm still a little bit skeptical about, I'd be happy to get out at $30. So I hope they call it away from me in the next 14 days. I would be happy to pull that out of my portfolio. Unlike some of the other ones where I think are doing very well. Like I said, Marathon Oil is doing very well. You got a big spike there today on that job list. And all of this is about the unemployment number that we got today, that we're seeing all of this excitement in and around these stocks. I mean, I don't think anybody would have predicted that it was a positive number. As a matter of fact, a lot of people on TV, when they were announcing that number, they were literally trying to look and see, am I missing the negative? Is there a negative side? Did I just say that it was a positive? All right. Anyway, check out yesterday's webinar. It's a completely new course that we're starting out. So if you're looking to get into trading options, this is the time to sign up for this course, because I'm laying it out from the basics, and then we're going to build on that. So if you start showing up like midstream, it's just like any other course, any other college course for that matter, where you build on the knowledge that you've learned at the beginning. Okay, and we're doing the same thing with these webinars. So check it out. Go to ProTraderStrategies.com and sign up for that. That's all I got for you guys. Other than we do need to go over this disclaimer. Please know we are an educational company. And other than that, I hope everybody has a great weekend. And if you can't take that, take it easy.